What's going on, guys? Welcome on into today's stream. We are live here Monday, the 25th of April, and we're going to be live until the market close here for about an hour or so. We're looking right now across the board at what we have. Big picture, here's the heat map of the stock market. We have a massive, massive week. We'll talk about earnings coming up. We'll talk about a lot of stuff. The core days for earnings is going to be Tuesday, Wednesday, and Thursday. Those are going to be your three core days. Realistically, no one super influential has really reported today or will report today. There are some bigger companies there, but for the most part, in terms of bigger players, tech names, bigger weights in the S&P, bigger weights in the NASDAQ, those players are coming Tuesday, Wednesday, Thursday. Okay, so that said, we are looking across the board here. We do have a noticeable down day in energy. If you look at some of the energy stocks, they're down a good bit. Why is that? Well, crude oil has pulled back under $100. It actually bounced up a good chunk. Let me see if I can zoom in here. We actually were down under $97 on crude June contracts. They've come back up a good chunk, so they've recouped some of those losses. However, still big picture, things are they're down below 100, which is kind of a key spot. The 10-year is also down today. It was down more. I mean, look at the 5-minute chart here. The past couple of days, this was down sub 280. It actually got down towards almost 275. But it's been kind of grinding back up a bit this afternoon so far as we speak, but it's still down from last week in a somewhat substantial way. We'll see if this trend continues, which is the key to watch here. What is going on? What is going on? Twitter, I think it's happening. I mean, if we some news I just saw, let me jump over to Twitter CEO, deeply proud of our teams, inspired by the work, blah, blah, blah. Twitter to be acquired by an entity wholly owned by Elon Musk. So yeah, it's happening. It officially, and I think it happened a lot faster than I think a lot of us thought. So look at Twitter right here. It had a nice little grind up past the past 2 days, it seems like, and today it kind of grinded up as well. But it seems like this deal is about to go down. And it's about to be done. It's a done deal. Now we'll see what actually ends up coming out of this, but it should be interesting to see this all play out. So that's what we have right now. As of now, it looks like Elon is going to be acquiring this. And we'll see, obviously, if this plays out, how this plays out. Further news breaks, we'll dive into it and stuff as things play out. Apparently, though, I'm seeing some reports that Trump will not be returning to Twitter, even if Elon Musk purchases and he'll be using his own platform. So that was actually an interesting idea. We're looking at DWAC, and this has got some crazy volatility today too, and it actually just spiked off that news because this thing, if we were looking earlier, if you go back to the past couple of months, this thing is in a nasty downtrend, and especially once we saw the news of Elon looking to potentially buy Twitter, it was like, oh, well, maybe Trump comes back on Twitter, then what's the need for his social media platform? But it seems like tech now, I guess, after we see this news, this is more of this is going to be Trump's thing. So we'll see if that actually, has a big role. Again, this stock, I think is, or at least has been substantially overvalued for what it is right now. Who knows what ends up happening with this company and what they do with it longer term. But in terms of right now, and especially given the market conditions, I think this is very, a very overvalued stock. But doesn't mean you can't get some volatility. So for me, it's not something that's worth trading at this point. Let it do its thing. Let this news cycle play out because you're at the risk of a headline any second. So is it worth it? I mean, you got to ask yourself what you think. Let's see. I was looking at the S&P, just went green, now went red, but it climbed back. So here's our bigger picture chart. We honestly got what looks like a very similar candle. We'll see how we close, but it looks very similar to this candle back here from this is from January. Not the exact same. That was a crazy day, but a pretty big pullback. Came down, and then we're going to potentially close up way higher than where we were low of the day, down towards 419, which was down towards the lows. We're about $6 off the lows of the day right now on SPY, which is a pretty big move. So the volatility is certainly here. We hit 418.84, and then we've bounced up so far, hit a high of 426.76. So almost an $8 move off the lows to where it hit a high a few minutes ago on SPY. So pretty crazy, but it's to be honest, it's playing out. Don't want to sit here and say, oh yeah, we expected this to play out perfectly. No, but it's playing out somewhat how we expected, right? Based on how things closed up last week, super weak. We got, a little more. We didn't get a huge gap down, but we gapped down. some sell-off into the first half of the day. And then so far, those, that early sell-off has been getting bought back up this afternoon. We'll see if that trend continues for the next hour for Power Hour, but that's been the trend. So I did cut a couple things. I cut a couple smalls. Reason why they just did not look too good. ATOS was one that I cut last week. I want to mention that one really quick. It's holding $1. It may hold $1 and that be your spot. If you're going to play it, I think $1 is your spot to watch. Also cut Load. I think this may be a mistake, but who knows? I cut it after this dump this morning. The reason why I ended up selling at 124 was because I looked back at the chart. We hit a new low on the year, and I'm just not interested in playing this thing. Yeah, could that be a final flush before a rip? Sure. Not going to hold this thing down, so respecting my stops once we fell below this 125. That was my stop point, and that's it. So cut some of those things. I'm fine with what I have as it is now, so, it is what it is. Let me jump back to what I have. I actually got to buy something really quick because it's time. It's time to buy some more NSPR. AESC holding that 160 area. Honestly, I might I might grab a little bit more to add to my position and then just risk it versus that 160 close. We close under 160. I'm out. And then what else do we got going on here? That's that. VISL, I want to see it hold 80 cents. NSPR. NSPR is one that I want to buy more of right now. It's a biotech, more cash than market cap. Classic setup. It's actually a really interesting chart. Look at this chart. It's been super low volume, so it's been tough to kind of, it is what it is. But look at this nice little, nice little rounded shape developing here. So I'm just going to buy about 250 more shares. I've been rotating a little bit around this thing, but now I'm going to start buying some more as we've come down a bit lower. And let's see. Let's put this 270 and see if we can get filled. If we can get filled, 273 maybe? 272. Let's try to get filled there. It's super low volume, so you got to be careful. The spreads are not huge, but yeah, we got filled at 272. That's fine. I'll take that. And then what I could do is, if we get a pop over 3, I could trim that 250 shares off. I'm waiting for news here. That's what I'm waiting for. I'm waiting for a spike on news is simply what I'm playing it for. So beaten down, bottomed out bio. That's coming down towards some of the lows. It's not really at a risk, at least as of right now, of hitting those lows from earlier this year, but I like where we're sitting at, to be honest. So I think this is one that I want to be, I want to be grabbing some more shares if I can. Tesla on watch, Elon Musk to buy Twitter for $54.20 a share in cash. Let me actually pull up some of that news so we can kind of see this thing as it comes in live. It's good to kind of see. Pull up, what's this, guys? It's fast. Stock market news. Been on top of things as of late for sure. Okay, let's see. Elon Musk to buy Twitter for $54.20 a share in cash, and apparently, let's look how Tesla's reacting to that. So let's see. Twitter is still halted, I believe, if I'm not mistaken. Yeah, it's still halted right now. So they're buying at 54. So yeah, this initial pop up here towards that 55 was actually, not a bad spot for it to move up to. And that's where it looks like it's going to get bought in cash for. Now let's see what Tesla's been doing. Let's see, because a lot of stocks have weird reactions to this. So Tesla's actually tanking off that news, believe it or not. Well, the market's coming down too a bit off of where it just hit, but Tesla's tanking in a substantial way, down 2.5%, almost 2.25% is what it's down today. Tesla hit 960 in pre-market, and big picture, on the daily, we got to zoom in here a bit, but on the daily, it's still holding this area of support that it's been sitting on the past couple of days, past couple of weeks, really, right here, this 975 on the daily though. On the 4-hour chart, you can see a little bit of a wick down below 960s where we dipped down a couple times, but that 975 has been the area we've been holding up on the daily. So that's something to watch. And also too, it's funny because we've seen some stocks taking some hits off of this where we had JetBlue, for example, come out and say, hey, we want to buy Spirit Airlines, and the stock got destroyed off of that. Then we have, in this situation, it's not like it's getting destroyed, but Tesla's down 2% off of Elon Musk buying Twitter. So I don't know how much that really matters to Tesla, but then again, that's the reaction we're getting. DWAC extremely overvalued. Yeah, I mean, that's what I would say. You look at, there's even been a short report on it. I don't even honestly pay attention to the short report on DWAC, but if I go to, I think it was Hindenburg. Maybe it was not. Maybe it was Hindenburg. I forget who it was. But there was a short report on DWAC, and I didn't really go through it, but I didn't even need to go through it from all I saw. So this is overvalued. This is just an overvalued stock. So that could come down a bit. I was thinking if with some of these rumors and with this buyout, let's look at DWAC really quick. With some of these rumors and this buyout news of Twitter, I was thinking that this actually could be a really good short idea. And it was a good short idea for today. Now, obviously, it's down 13%. It actually was down much more. But that said, right, now that they had the news that Trump will not be coming back to Twitter, he's going to do his own thing and he's still going to, push on Truth Social, whatever it is, then, it is what it is. So he's going to be there. My thought was, what if Trump comes back to Twitter? Well, then is there no need for this new company that he was creating now? And first off, I don't think he would do that. I feel like I don't know. I'm not sure if he'd be willing to do that and move back to Twitter, but who knows? So that was the idea behind it. And we'll see, but apparently he will not be coming back to Twitter. So we'll see. CVRX, small medical device company, looks interesting. Let's take a look at CVRX. Well, let's pull this bad boy up. Chart-wise, it's at a bottom. 460 is the lows. Market cap 100 mil. Let's take a peek at what they got in their last earnings. So Twitter agrees to a $44 billion buyout. That's insane. I'm honestly very surprised this actually went through. I really didn't think that this was actually going to go through. I thought this was just going to be some news. I thought Twitter was going to just be like, no, whatever, like, you know what I mean? Like, yeah, we're not going to actually entertain this. And then now that's actually happening, which is pretty crazy. All right, cash. What do we got on this guy in cash? Okay, cash and cash equivalents. They are reporting earnings very, very soon on CRVX. This is a bio. Is it a bio? I'm pretty sure it is. We'll jump over here and pull it up. CVRX. It's trading under $5. Right around $5. You got a 10 million float, low float stock. You have insiders with some transactions as of late. Yes. Oh, yes, they do. And look at these insider buys, by the way, in the 7s, 8s, and 9s. That's pretty nasty. So you have insiders buying this bad boy up in the upper, almost near $10, and not a small amount. Let's go to Open Insider really quick because they'll tell you the percentages. I like this. Could be an interesting stock to look at. CVRX. Apparently, it's not showing up here for whatever reason. Okay, whatever. So we'll go back to our FinViz. Okay, so yeah, this is interesting. This is an interesting stock. So they got some insiders. A couple directors bought $200,000 or $200,000 worth, $300,000 worth in the 7s and 8s, and it's trading around $5 right now. And you're talking about a stock that has it's trading roughly at 100 million market cap, and it's sitting at 140 million cash as of last report. They're going to report earnings again soon. So that's pretty interesting. They had 20 million in rev. They're expecting for this year $20 to $23 million in revenue, margins between 74 and 76%, expenses up here. So again, this is interesting. Again, the cash position obviously will be bled out, and that's a lot of what we price in the future of that. I think it's gone to an extreme for a lot of small caps, especially as of late. But you now know with this cash position, you essentially know at the end of last year, right? If you divide that by 60 million, let's just say that they are underestimating the expenses and divide it by 70 mil. So divide 140 mil by 7, you got 2 years. What is that? You have 140, right? That's the math, by 70 million. Yeah, you have 2 years of them being able to operate without the need for cash. Now, if they get a spike, they may as well do an offering. It's possible, right? But it's an idea to think about. So this is good. This cash position is not the end. Like, it's not the end of the world if they don't have more cash than market cap. There's stocks that have that, but there's plenty of stocks out there that are trash and that will never have any positive news. That will never have anything that is worthwhile touching in the next couple of months anyway. So you can have all this cash, but it could go to waste essentially by just burning it through operations and whatever, and expenses, and then paying your employees, only for the company to never actually, do anything. For the first quarter, they're expecting revenue between 3.6 and 4 million. So this is the only thing, you'd want to watch for this because this is coming out again, right? This is coming out. What is this? They're going to be reporting their earnings on the 25th. after the close. So look at that. We got one today. So there's your play. We can look at this one today. I'll take a peek. This could be a spiker too at the earnings. CVRX is a stock. We'll just write that one down so we keep it on the radar post close, so that we can just jump over to it if they report the earnings somewhat timely, and we can jump in. But yeah, I mean, I like what I see so far, and now you have the numbers. They're giving it all to you right here. They reported the earnings, they gave you the estimates, and now do they come in line is the question. So they're very proud of accomplishing everything in 2021, despite blah, blah, blah. Okay, yes, sure, everyone's got the same deal. We're excited about the position we are in as we move into 2022. Throughout the year, we'll be focused on driving accelerated adoption by executing our commercial strategy, which includes the continued expansion of our sales force and the efforts to educate healthcare providers and consumers on the benefits of barotism. Is that how you say it? I don't know how you say it. Whatever. It could be interesting. I mean, this is not necessarily, this could probably a play, I would imagine, that is more of like a fundamental undervalued play. But unless, if you want to, you got to dive deeper into things, unless they had some more big time catalysts coming up, my guess is that they have a product and they're looking to just grow essentially the sales, and they're just grow their awareness and all that stuff. So that's the biggest thing, it seems like, for them right now, at least what they're expecting in their numbers and whatever. So, that's that. They could obviously have some good PRs along the way. They filed 3 submissions for the FDA. Okay, for these different things. They received FDA approval for their IPG on December of 2021. Approval for the 2 additionals. Okay, well, here you go. This is where you got to dive into some of the numbers. This is some of the text right here. They're expecting approvals for the other 2 submissions first half 2022. So they got approved for this, okay? They're expecting approvals for MRI conditional labeling, which will allow MRI scanning with specific instructions for patients implanted with barotism. I don't know how you say it. New programmer, which will provide even simpler programming software in a test. So this is actually really cool, because this is an interesting I don't know. Again, I'm not very, very familiar with this stuff at all, but this is interesting. When you're looking at products, or when you're looking at certain sites, running data and getting data back, this is interesting because you have less issues with the FDA in terms of getting this stuff approved. My guess, it's easier to get softwares, to get labeling. Like this stuff doesn't seem like it would be as hard to get approved. Whereas, let's say you're trying to create a product, or you're trying to create some sort of therapeutic that people are gonna have to take. You know what I mean? Like this obviously will impact people based on all this stuff. But like at the end of the day, this seems like this could be a lot easier to get approved. So I would have potentially, just on the surface, have more faith in this idea, or in these 2 getting approved. So what happened? They got that approval in December 2021. Did it spike? No, the market wasn't great, but did it spike at all? Did we get any noticeable big time move on the stock? Doesn't look like it. December, we had a move we ranged from $10 up to about 12, 13. So really didn't move the stock too much. But now when you're sitting down here, maybe things get interesting. And we've been seeing some more volume as of late for sure. So I do kind of like it, and we are kind of lining up with the time period that I think if we see a reversal in the market, this could be a spot to watch. So just like other stocks we've been noticing, risk it versus the lows. It was a long kind of, process to get here, but risk versus those lows. So 460 is kind of your spot. 2 consecutive closes under 460 and you can cut it, or, you could play it out for those catalysts. Play it out for those. Obviously, there's no guarantees that this gets approved, right? So there's that, but you can play it out for the first half of the year. So hold it through the summer and call it quits if it has not moved, substantially off your average or whatever into that time frame. So that's not a bad idea. But now we have to look at this really quick. Let me just jump back. So this is going to come out today. The earnings. So we'll get some information there. And if it's not super, super crazy numbers, then it might go quietly, but we can look into the earnings. And if it goes quietly, what we're able to do is essentially, we can look at this thing. Okay, now after this earnings is out of the way, that takes one more potential risk off the table. And if they still got a good amount of cash, they're still sitting pretty, and they have some more updates in that earnings report that maybe no one's paying attention to because it's quiet right now. Small caps are not very, very hot. No one's looking this way. You can probably have a much more confident trade behind this thing after the earnings. That's why I like. We'll look at this one, and I have a little bit of cash I could potentially partake. We'll see. What I did do, really quick, SPY 5s ready. What I did was I bought some SPY 460 calls. I got 5 of these. So, whatever the position size is. I got 5 at a 144 average, and they're going for 158 by 160 right now. So I was looking for, this is a play that I have out to June. So I got SPY 460 June 17th. A little more expensive, but based on the chart, for SPY, 460 is a little more, reasonable. Okay, like 500 for June, as crazy as it could be. If we get a good bounce, those can go from 5 cents to 10 cents like this. But this is a little more reasonable in my view. So if we were to get a bounce back up into the 430s, then yeah, I'll take it off and just lock the gains in. It'll probably be 100% play, and I'll be like, okay, I'm fine with that. You know what I mean? On a very short-term move, maybe leave 1 or 2 contracts and just put a trailing stop loss on them, and that's it. If we do get a further dump, my plan would be to add into this zone, into a flush, if we got that. And the reason why I say that is because we have some big time earnings this week. So that's where I'm leaving some powder. So I believe on the stream or last week's video, something like that, we take, if we get that flush on Monday, take about $1,000 and toss it into some SPY options, looking for kind of 100% bounce back type of trade on the flush. I tossed in about $500-$600, so I'm like halfway in on that position. And if it goes from here, great. I'll just let it do its thing, and it's going to be fine. But if it dips from here, I have that powder just to add in. That's the risk I'm willing to take on that. So we'll see how that plays out. SPY right now, as we speak, is trying to build up and trying to push up and attempt those highs again. We'll see if it does. But the volatility is certainly here, so interesting stuff. SPY 418, now up we go. I mean, hey, it was close. And no one could predict the exact bottom and the exact tops. But hey, the idea seemingly played out. I personally thought that I thought we kind of saw that gap down, and I was like, oh, we kind of started to grind back up before the open, and I was like, oh, we might actually just kind of pop green, even off a small gap down here. But we ended up, coming down further, which is I was happier to see that. Because if we had just kind of gone green right at the open, I'd be like, then you kind of miss the opportunity to grab anything, any dip buys or any ads. I didn't buy anything outside of the SPY calls that I got, which that's it on that front. Didn't add any dip buys. I bought dip buys last week, and to be honest, a lot of stuff I bought dip buys on last week. Well, yeah, they were down last week and it was nasty. Like Labu's up, so I'm gonna let that thing ride. I'm not gonna buy this thing I'm probably not gonna buy any more of this thing. Biotech's doing decent. SOXL, the semiconductor bull ETF is up, 1.5% today, building a nice higher low. So yeah, we're looking honestly like things trying to put a bottom in. So we'll see. Bought the NSPR, just rounded myself out to 2,000 shares now on this thing and brought my average down a touch, but that's still a bigger picture move. So yeah, other than that though, I cut a couple things of fat off the portfolio, so I got some cash if needed. I could honestly snag, let me see this Mesa. And if I can get filled for 3 contracts right now at this like 15 cents, I will take them. I'm going to leave that on there for today. If I get filled there, I will just let it fill me. This is going to be interesting. I mean, my average is now coming down in a substantial way because I've been really kind of buying a ton of these contracts. Not a ton, but a lot more contracts as of late because they were going for a lot more, a couple weeks back. So my average is at 61. This is obviously a small cap airline play. So it's super, super, risk right now. But we've seen this thing in the past when the airlines really heated up last year and it hit 17. Not saying it goes 17, right? By no means. But 2019 prior to, 2018, this thing was up here towards, what was this thing up towards? 15. Pre-pandemic, you're talking this thing was up around 9, 10, trading over 10 back in 2019 summer time frame. So, something like that is a realistic spot. I'm looking up towards 750 or so is a spot that I'm watching. So we'll see if we get that. And it's made those crazy moves. And these moves have taken less than a month to actually go through. So November 5th to December 5th, you had a move right here. This is last year, or I guess this is now 2 years ago, back in 2020, about a year and a half ago, of 135% in a month. And then you had a move of, looks like right here, same thing, about a month out of 160%. So it can make some crazy, crazy moves. You just need market to be fairly decent. We need IWM to look okay, right? We need SPY to be okay. And it doesn't have to hit all-time highs, but just look okay, not just headed straight down. And then I think you'll see people come around that way, and especially if Jets gets up and continues now, and gets up to us at 25 target zone that we're looking at. That'll be what gets you there on Mesa. So that's it. That's just, and I got July contracts. So we're out to July. If it happens by July, great. If it doesn't happen, and we take the L. That's essentially how I'm playing it. So that is that. Look at these SPYs now. These are up. Let me look at these. Man, someone just slapped this too with a big amount of 1,000 contracts. So these are up to now. What does that mean? I'm up like on that 144 average on 5 contracts. Means I'm up approximately 16% on those. That's not bad for first day one of a potential move. And I didn't get the absolute bottom, so it is what it is. All right. Thought Snap would pump, but I think, to be honest, let's look at Snap. SPY is going for a new high here. It's about to test that spot. Snapchat is sitting here at this 28 support, right? 27 support. 28 is a spot. This is going to basically be, a player based off of some of the big names, I think, over the earnings the next couple of days. So this is going to be pretty volatile, and it's going to really come down to, I think, a lot of the bigger tech names of how this sets up. But it's at a good spot risk-reward wise if you're just looking to play a range, This is your range, 28 to 38, 28 to 38. It's been a good range the past, 3 months on Snap. GRNQ looks like it's holding on. How's the chart look? Let's take a look. GRNQ. Oh, also Grill. I was looking at Grill today. I'm going to mention that in a second. Compliance by July 1st. Hasn't been any news. No, but it's actually building up higher lows. I mean, if you look at this chart, it's not bad. So it's to me, it's this is the spot. It's 40 cents. It's actually holding the 50 SMA. If it falls below 40 cents, I just say, it's not worth holding it, especially because you do have compliance by, July 1st, you say. So, yeah, so you have a time limit to this, and you don't want to be holding this thing when they do a reverse stock split because they're going to get killed on that thing. Not all the time, but most likely you're going to get killed. So there's no need to just kind of be around and sitting there and waiting. So if it doesn't work out, it doesn't work out. But July, by let's say earlier mid-June is kind of a good time frame to have on a swing for this thing. But I do it's honestly building higher lows. So 40 cents is your spot. That's your cut point. So it's not a big risk from here. I don't mind it. Grill at 44 cents, just kind of slowly kind of petering off. There's no volume here. No one's buying. They've had some good news. I want to check. We can check on their earnings. I guess they're probably gonna have earnings relatively soon, or we can just double check on the latest one, see what's going on. But Grill has compliance by, I think, August 31st or August 1st. I think I wrote it. I think it's August 1st. So they essentially got to get, I have it pulled up here in a second. They got to get their stock price over their bid price over $1 for 10 consecutive trading days. And August 1st is the compliance date. You can get an extension of another 180 days. So it's possible that these companies could extend, but you start running the tightrope there, and is it worth holding and this and that? So just be careful of that. But that's what I'm watching for Grill. So a good timeline on the Grill trade would be, I don't want to hold this thing deep into July. You know what I mean? If there's no news on this compliance, the good chance they're going to either do a reverse stock split or they'll get an extension. But if there's no news upon that, I don't want to be holding this thing with heavy size deep into July, coming up on that August 1st, just in case. Who knows what happens? There's no need to be, to risk things. That's just the idea. So give it a time frame. Maybe put a time frame on that. Set an alert. Put it on your calendar. Say, hey, July 1st. Put an alert saying Grill compliance needs to be over $1 by August 1st, for 10 consecutive days, just so you're watching it again come July if you're still in it at that point. If it spikes before then, obviously great, you're out, and you make money in the trade and move on. But there's something to think about. Trading below cash value too. So I mean, come on with some of these things. Let me see if I can let me pull up Grill. But yeah, man, I do like that CVRX. It does look pretty interesting. I do like that. I was looking at PDSB today as well. So let me look at Grill really quick and see what I can find for their last. Do they have anything for their last earnings on FinViz? Doesn't look like they do. No. Speculation on terrific earnings. Yeah, I would imagine that we're going to see earnings from them at some point relatively soon, right? Well, let's just check if they had reported, when they last reported. So the last news, March 29th, they had some 5 new. It seems like they're expanding really nice, and their Pokemoto division that they acquired is on pace for, I think, 300% growth this year. Like, they're in some decent stuff. Yeah, restaurant sales growth and improving. I mean, this is a good rebound trade too. Think about it. Going into the summer months, just if you look big picture at coming out of the pandemic into the summer, people eating out more and more and more. And I don't know much about the company that they acquired, but they were able to cut. Oh, let's see. They improved some costs. They had $15 million of cash, so they're fine. And they talked about that. They're good on that front. And let's see if I can find what Pokemoto is really quick. I think if it's just Poke, I think that's just, yeah, here's the site. Okay, so it's just Hawaiian Poke. I mean, this is I have never tried it. I definitely want to, but like, this is I feel like it could be a very, very popular summer type of food. You know what I mean? So if you think about it, like, this trade, I like a lot. I like it a lot. Now, if I was to go and try the food at one of these locations, then we got a different, and it's good. Then we're really talking. So they're in Connecticut, Mass, Virginia, Rhode Island, Maryland, Florida. So they're not around me, but we got a Poke place like close by. So I definitely should try it one day and see how it is. But yeah, so I mean, that's just a recent acquisition. That's not even like everything. They got a bunch of stuff going on. They got Muscle Maker Grill. And yeah, I mean, I like the play. I still don't dislike the play. And we were talking about it last week when it was around 50 cents. Well, guess what? Now you can buy it for 44 cents. So I don't even know how much cash I got, but this is one that I really like, to be honest. And this last report, by the way, on Grill, we can jump back to it. This came on March 17th. So let me jump over to MSEC. When did they report their last financial report? They reported here on March 17th. Yeah, so they're not going to need to report for a while, for at least a few months. So yeah, they're good for a bit. I mean, this is an interesting idea. I to be honest, I mean, it's making me want to take a position right now. I like this. I like CVRX. I mean, those are two plays I do like. I mean, right. And it comes down to us. You don't necessarily, especially when it comes to swinging some small caps, you could be wrong 17 times in a row and then have one 200% monster that makes up for all those and some. You know what I mean? Which is why I was fine with cutting some other stuff, like cutting load, fell below support. Okay, cut it. No need to be on there, right? Grill now could be one that be worth taking a shot at and holding for a few months, swing into July, with that being the time frame of like mid-July, and saying, okay, that's it. Don't want to be holding this thing into August. And then CVRX, or whatever the one was, CRVX. It was CVRX. Could be another one after the earnings today, depending upon how the earnings come out. You know, ideally, the earnings wouldn't be crazy, so that you can get in without a spike, and then they drop one of those FDA approvals in a couple of weeks. Boom, then you get a massive move. That would be in a perfect world, right? Perfect scenario. But those are two. I mean, I'm gonna write this one down. CVRX on my other list too. I've written it down, but I want to write this down on my swing list. Kind of an extension of the list we built out for that one day we did that due diligence sesh. Was it last week or 2 weeks ago when we had market was closed on Friday? PDSB is another one that I have had on my list too. I like it a lot versus $5. So here's the two zones that I'm looking at right here, down into this range. I really like PDSB. It's actually kind of building higher lows too. So I mean, I'd say $5 is a good risk reward spot. So man, this is another biotech. They don't have more than their market cap in cash, but it was a very, very, very popular biotech a few months back, or in the past couple of years. I know a lot of people who got behind this one and were really liking this thing. I'm not saying it has to go to 10 plus, but a nice move to kind of break out of this little down. It looks like almost a wedge too, kind of setting up. You know, we'll see how this ends up setting up. But if we get up towards this trend line, that could be a good spot to take some profits. And then the next spot could be up here, dare we say, up towards that 200 SMA, up towards 910-ish. So I like that chart too. There's a lot of stuff that's just really, that's getting me interested, especially now. And like we said, again, take this trade, right? You take this trade in small cap land and you actually respect your stop and you risk it to $5. Well, you risk 7%. Okay, cool. I risk 7%. This thing gets some news or the thing pops to that trend line, you make 22. So your risk reward is really good. And if you get a news play off some of these small caps and you get a 100% runner, you know what I mean? You're up huge. You can take a bunch of those little paper cuts and still have a 100%er and make up for it. So that's just the nature of the game. And eventually you'll have hotter markets and eventually it'll be easier. You'll have a higher win rate. But even in the times where you have a lower win rate, we're still getting some runners. Like NX or NKTX is up 130% today. It's like we're still getting runners. It's not like we're not getting runners. So it depends. You just gotta hit the news. The news has got to hit just right. You know what I mean? Look at this candle on SPY though. Look at this. This is the daily chart now. I'm gonna get rid of this little band here. This is a spot. We kind of know just to clean it up. But now we'll see if this bottom is in. If this is the bottom from this pullback, we'll see. Not gonna go and get ahead of ourselves there with a big earnings week on tap because who knows? Anything can happen. But I mean, look at this. You want to talk about inverse head and shoulders. So this is like you have the almost to the exact cent of the last shoulder. Oops, I didn't mean to do that. I want to do this. So the lows of January came down to 419.30, and the lows of today was like 418.80. So you're like 50 cents off essentially, which in my view is nothing on SPY. You're less than $1 off in terms of the exact bottom location that we potentially could be setting on these two bottoms. So we'll see if this inverse head and shoulders actually plays out and sets up. But it's something that I'm going to keep, we'll keep an eye on and watch. And obviously today, this candle, we literally just talked about it. We're looking for a candle to look something like this late February or this late January candle, which in my view would be a really good sign for a reversal. And if we close up here over 426, really on SPY, it's a good chance that we're going to get that look. We'll see. Still got 30 minutes. Don't get ahead of ourselves. 30 minutes is a long time. All right, let me jump back. CRXT, get a relief bounce, less over 50. The problem with some of these is that it hasn't been very, very hot. We've seen a lot of things like this. You could get a relief bounce, but I don't know. You could easily come back down, hit the lows, and go even lower. So I would be very, very careful. I personally am not a huge fan of this type of stuff. I get it. The market's just not, I think, hot enough for that. If the market was really, really hot, small caps ripping, and it's like, oh my gosh, everyone loves playing the cheap stuff, which we've had, we obviously have had times of that over the past couple of years where it's hotter and less. We're just not there right now. So for me, it's just the risk is like, I don't know if I would mention tying it up. If you want to play it, but give it a week or two, and then, I don't know, whatever your time frame is going to be on holding that, how much cash you want to tie up in that. Twitter. Oh yeah, Twitter is open again. Let's take a look at what it did. I just saw that too pop up on the side a few minutes ago. So what is Twitter doing? 52. Yeah, so it's essentially up around that spot. It honestly didn't do anything super crazy. It's actually just kind of building higher lows and trending up. Resistance up here towards 52.25. But the buyout was like 54 something, right? That was the price. 54.20. Twitter will become a privately held company. Crazy. I did not think it was gonna happen, but here we are. Oh yeah, Penn. Mention Penn really quick. One of the more of a fundamental play that I've had. It is what it is. You get caught up in the market conditions and everything, which is why, if you're a fundamental investor, it's one thing. This has been kind of a hybrid mistake, was that I kind of played it in a hybrid sense, but I still have options that expire next year. So it's not even a huge deal. But the whole thing with Penn is that they had an upgrade. I forget who it was. It was let me look it up really quick. I want to say it was Morgan Stanley. If I recall, my guess was it's Morgan Stanley. Yeah, Morgan Stanley. Here it is. So Morgan Stanley comes out and is like, "Hey, we actually are bullish on you now." And they're like, "Okay, we think we're gonna put a price target of $51 on you." Whatever. You know what I mean? It's just the same games. These price targets come out and they're to the downside. Then all of a sudden, wait a second, we think this stock's actually a better, it should be trading higher than this. But the stuff stuff I've known. If you watch the earnings, you know this stuff already. So it's not, the advantage here is not chasing, a price target upgrade from somebody else, is doing it yourself. Every stock will be different. We've had a different market condition, obviously, but in a little bit better of a market condition, or maybe who knows, from now on, this could be what maybe starts to spark and the bottom is in and we kind of bounce and build from here. We'll see. I still think we can see 52 and then 63 are my spots. That's big time picture moves. We'll see if we get those moves. It is what it is, but that's that on pens. That's what's going on there. I think it will still be a good long-term play. Let's see. SPY 460s. I missed a bunch of these comments. I'm going to go back through. SPY 460s. That's a good strike. It depends on what works best, what you want to do. The 460s for me for June seem potentially realistic, and dare I say, we get a crazy SPY bounce. It's potentially possible that I could have a contract or two, if I hold them that long, go into the money. So that's what I'm going to do. I'm going to hold. Ideally, if the bottom is in and the earnings this week don't test the lows of today, and the bottom is in, and we get back up to the 440s and something like that on SPY, I have 5 contracts. Good chance that 3 of them are going to be gone before the end of the week, and then from there we'll see what happens. But that's just the plan. Ride 2, maybe bring a trailing stop loss up and just say, okay, here's my next spots, and that's it. So that's the plan for those. The time decay, the longer it takes, it will burn them pretty bad. So you just got to be careful on that. The time decay can be a killer. If the thing kind of sits around or pulls back a bit, so it's going to be, you want to make sure you get a nice move, just take it off. Interesting trade day. No, I'm telling you, I same way. I find that it's easiest for me and tend to have the biggest days when you have big time downside moves, especially with a day trade or individual trades. Like the SPY trade for me just made a lot of sense. We talked about it the past couple of days. It made sense. If we got a big dump on Monday, a gap down and a dump into the first half of the day, it was a spot to be booked buying calls. And yeah, we obviously knew we had earnings coming up. And yep, I know a lot of people were thinking the exact same thing. Everyone's scared. No one wants to buy before the earnings because what if they're bad? What if they're this? What if they're that? I 100% agree. But if a big time move happens prior to those earnings, potentially, now we'll see what happens, but it's very possible that move priced in a lot of the bad. And now all of a sudden, if these earnings come in and they're like, okay, they're fine, or they're not as bad, they're not potentially that bad, or they're, we have let's say an even split, some good, some bad. This may be kind of a nothing burger in terms of the reactions on the earnings for the market. We shall see, but it's something to think about. Metamaterials went on a big run. Let's take a look. Let's take a look. Yeah, I did see a little bit of that moving today. MMAT hit a new low. Funny enough, right? We had this support area right down here towards 140, and it broke below that, and it popped. So the key is now it needs to get over 150. Really, I would see 150 as a spot. You got to get back over 150. If you can't do that, this little pop is cool, but to be honest, you're kind of sitting in a spot where you could be now just building these building these lower lows and coming up and now finding prior support to be resistance. It's the same thing chart-wise. This chart reminds me a lot of ELYS. ELYS, I liked him. I did. I really wanted him. I want it to be a great trade. I wanted it, right? But what happened with ELYS was we did the same thing. We came below some of these lows, and then every pop back up for a couple weeks, we could not get back over 240. We couldn't do it. We were just, establishing that this now prior support was now resistance, and we couldn't do it. And if that's showing up and that's happening, what that's literally just telling you is that the stock is in a downtrend. It's now, it's just, when a stock is building higher lows and it breaks over resistance and prior resistance becomes support and it keeps going, that's a great sign. It's very, very healthy. It's just the exact opposite. It's just a flip side to the downside. And then eventually we got the earnings and whatever, and this thing came down in a big way. Now, I think it will be worth a scoop at some point, especially because ELYS, by the way, is coming down into a very nice area back in here that we've seen this thing bounce from very, very nicely over the past couple of years, going back to 2020. So I do like that. So it's something as it starts to kind of establish a new bottom. Now we'll see how it plays out. But In the meantime, that the chart, this is why technicals are important to some degree, and seeing certain things over and over, you start to realize, wait a second, I saw this before. This happened here. This happened here. Maybe it's wrong. Maybe it's just something going on. Maybe it's sketch. Maybe it's just a fake out, whatever. But for me, when I saw the ELYS move, it was like, I just need to get out because I'm not trying to hold this bag. I'm not trying to get stuck in something bigger. And if I did get stuck in that, well, I would have woken up one day, went to bed at things at $2, woken up the next day, and the thing is down under 175. And it's like, oh, sheesh. All right. Let's see. What else is going on? Grill right now, 300 shares. No, but again, with Grill, you can get a nice spike on that thing. So, I mean, I'm looking at that as an idea. We'll see how this earnings comes out for, what is it? So for CVRX. So that's what I'm really interested to see, how the CVRX play comes out, earnings after the close. If that earnings is really good and they still got a lot of cash, that could be worth a shot with some FDA approvals coming up that they're expecting in the first half of this year, which, by the way, first half of this year, we only got a couple more months, so that time frame is nice and short, gives you a really nice timeline, and it could be a nice play. So off for some nice PRs. And if they don't move off the PRs, okay, it is what it is. And you had some insider buys as well, so you got some confidence on CVRX. So I do like that a lot. Let's see. Earnings aren't good. Does it automatically mean stock will drop? No, not necessarily. Not necessarily. It doesn't necessarily mean that, especially with some stocks. Generally speaking, you'll see a lot of stuff come in when earnings are when we're in a really rocky market, or when a stock is up a ton. Like if you had a stock, for example, like Mullen, like if Mullen comes out with earnings, right? The past couple weeks, this had so much volume, it had so many more eyes. So now, because of all that, you got people, like we said yesterday, you got people that are like this. They're like sitting there on their computer, shaking, sweaty palms, like they're stuck to their seats, like because they got to do something. They're freaking out. So that's what you have, right? On earnings. When you have a stock that's got no volume, unless the earnings are horrible and the stock should be valued at like half, right? Because they did, like, let's say a company comes out last quarter, they did $5 million in revenue. They come out this quarter and they do $1 million in revenue, and they lost, more money. They had more expenses, all this stuff, and they had no explanation as to why. Well, then, yeah, you could probably see the thing kind of trade off a little bit and tank down. But generally speaking, when there's a lot more volume, a lot more eyes, that's when the earnings reactions are a lot bigger. So that's what I think you're also seeing right now, because everybody saw Netflix, everybody saw what happened last week. And everyone's sitting themselves, whoa, if I can nail the next Netflix, here we go. I'm going to be rich. Let me go over here and buy some Apple puts. I'm going to buy some Apple 140 or 150 puts. And when Apple tanks off their earnings, I'm going to be rich. Well, guess what, right? Everyone's thinking the same exact thing. And a lot of people are doing that. And if you're doing that, they're going to cost you. So right now you can buy Apple 150 puts for $1. Yeah, it's cheap. Okay, it's $1. Chance of Apple dropping to 150, if it happened, right, from where it's at right now, Apple to 150 puts you at a roughly 7% dump. I'd say it potentially is safe to say SPY could come down and test the lows of today and maybe even go lower. So you think that's going to happen? Sure, then take the trade as an idea, as a lottery ticket. But I think you have a lot of people in that mindset right now, trying to catch the next Netflix, trying to find the next overvalued play that gets killed, trying to, and with that expectation, when everyone's buying puts, like we say, generally speaking, it's usually a good sign that the opposite or the bottom is in. I want to pull up the put call ratio. See if I can find it. I forget what link was the best link to pull it up. The put call ratio. What are we looking at right here? What was this guy showing us? Yeah, there's a lot of different charts to find this. Let me see if I can go back and see. But it's funny. If you look at the big picture, like this blue line is the put call ratio. This is actually a really good chart, by the way. And they're all calculated slightly differently, whatever. If I go back, let's just go back past 5 years to kind of zoom in, okay? So here's a put call ratio in blue, and then here in orange is the S&P 500, okay? So do you see that short-term tops correlate with these valleys on the put call ratio? And that some of these short-term, let's see what the next one, short-term bottoms like right here in January, correlate to some of the tops here on the put call ratio. It's the funniest thing. Look at this. The pandemic, right? No one really, whatever happened, right? Whatever. And all of a sudden the put call ratio spikes. People buying puts left and right. You can't get enough puts. Guess what you did? And everyone got burned. And this is looking back. At the time, I wasn't really paying attention to this type of stuff because, I was like, okay, it is what it is. I wasn't really thinking this way back then. Obviously, the past 2 years taught us a lot to look at a lot of other different things just to kind of get a feel for things. Doesn't mean that it's one indicator that's end all be all, right? But look at this. I mean, the put call ratio spikes up, market tanks, and what was that? The literal bottom. The literal bottom was put in when the put call ratio spiked. You go back here, 2018, 2019. What happened? Put call ratio spiked. Bottom. Go back here to early 2018. Put call ratios popping up. Right? We got this back then. We had I think it was 20. I forget what it was. Whatever. Put call ratio is popping off here up over 1. And guess what? From that point on, the market grinded higher and higher and higher, and then put in a top in late 2018. So it just shows you, right? It just shows you. Again, put call ratio is pushing on up as we speak, as of right now. And guess what? Market's coming down. So it's in big picture. Now today it's up, but it's just funny to look at. So those are some good charts to look at. This is the chart. This is the site that I've been looking at. For whatever reason, I was able to just look at this yesterday, and now I can't. But the put call ratio tells you it's 0.87. There's no update to that number yet. We'll get that at the end of the day today. So we're still waiting on the put call ratio to come in from that site. We shall see. A little more on grill wine. GLTL, ELTN, RF. Yeah, no, I think I have a bunch of those written down too. I'll put some of them on my list as well. Just need to free some cash. No, that's just the reality. Is I think that, and it will take time. Let me tell you guys, like there's no need to rush too, because like everyone rushes in, and I think we got a little carried away. I think I did too as well with some of those, some of the small caps I played the past couple weeks, that I had to now cut off for small losses, but I had to cut them off because this gave us a little false sense, kind of popped up, and then we kind of faded right back off. So it's like, okay, when is the market going to kind of catch? When is the bottom going to be kind of caught for some small caps or for small caps in general, so that some of these bottoms start to hold, and now stuff trading below cash starts to hold up? It takes time. Sometimes it always takes a little longer. And so what people did, boom, they get hammered, freaked out last week, freaked out today, whatever. And maybe I'm wrong, but maybe I'm right. At the same time, you may see that this is the dip to buy in small cap land, and this is where you start seeing stuff build. Doesn't mean that SPY goes to all-time highs. It just means that right now, maybe this is the dip for, let's say, IWM or small caps that gives some confidence, and people are now more excited, and there's some more legs behind some of these things. They don't blow through supports and fall back and keep going down to zero. They start to hold supports better, and people just tie up cash, or they lose up a ton of money too fast. There will be many opportunities if this even is right, that bottom for small caps, and we do bounce and we do start seeing stuff hold supports better. There are so many stocks that no one knows about, and SPY could go to 400 or 500, and there will still be so many stocks that nobody knows about that will then start to get found. So there will be many opportunities down the road if the market does, build some legs. So we shall see, but there's no need to rush and feel like you're rushing. ATER is popping off. I saw a little bit of that yet, popping up here, 487. It's a funny one because this thing kind of looked like it was was starting to fail. It did show some signs last week. The key spot is $5, so ATER is coming up towards $5. I have an alert there, I think, actually. If it comes up and gets rejected around 5, that's a spot to watch. But this is going to be an area of resistance up here towards 5 on ATER. So just something to think about. Make sure you're keeping it in mind. I want to refresh some of these charts. The 10-year, 2.824. Yeah, it was down a little bit lower, but, still down below 2.9, 2.85 even. It's a good sign. But if you look at this thing, it's kind of trying to grind back today. Oil is sneaking itself back up towards 100. I don't know. We'll see how it plays out, but it's very possible that it tries to get back up there. If I go and look at like USO, let's see. USO is at an interesting spot. It's cracking this trend. So it's trying to this uptrend was holding for so long. Today it fell below, but it's trying to regain it now. So we'll see if it ends up holding up. This could be even a good idea on the short side for a move back to, let's say, $68 or so on USO potentially, if this trend is going to be now resistance. We also looked at the VIX. Here's the VIX. And so the VIX briefly today got to 3160. Okay, believe it or not. And the VIX actually has been a really good indicator of bottoms, and it's been a good buying opportunity every time we've spiked over 30. And who knows how high you're going to spike over 30, but this time we spiked up over 31. And now you're back down under 27, under 28, sorry. So you've come down in a fast way, in a hurry on the VIX. I would imagine it's still risky to play this thing to short the VIX now. Everyone's always like, yeah, short the VIX because it's an easy way to make money because the VIX never stays up. Yes, true, but you have a really volatile potential earnings session coming up. So it's just, there's a risk there. Let's see how this plays out. Obviously, high risk, high reward type of play if you want to short the VIX right now, and the earnings is a nothing burger and we kind of grind higher and the market just does what it does. Yep, I understand, but it's up to your risk tolerance. Everything tells us like, oh, you get, this is a perfect example of getting caught up in the tape and getting caught up in the day-to-day. You get excited now because, oh, the market's green. Oh, we put in a bottom. Oh, we were down 1% today. Now we're going to finish up 0.5%. Look at us. Bottom's in. Well, guess what? Look down the road. Massive companies are reporting earnings that have 6.5% weights in the S&P 500. If those earnings are bad, like in a substantial way, if they're very bad, then it's going to impact the market, right? If they're like kind of bad and it's like, whatever, then it's not going to be as huge of a deal. But it's like, just think, people get too caught up in like, they don't think 2 steps ahead, which you always have to think. You don't have to be like, a mind reader. You don't have to know the future, right? You don't have to have a time machine, but you just got to think a little bit. And it's like, okay, is it worth my risk for this? So for me, it's like I'm playing other stuff. No need to play those earnings plays and no need to play something super, super short term. So play some June contracts, play some, July, September, something like that. Give yourself plenty of time in case things don't work out right in the next 2 weeks on some of these crazy earnings. So SPY is attempting for a high here. Let's see if we can get it. With 8 minutes to go, we are 428.59 is the high. We actually have a chance to go about a $10 range today. Let's see if we can go for a high here. It looks like we're trying to. So roughly a $10 range from the low of the day to the high of the day, which is nothing like the $20 range we saw back in January, but it's pretty good. And we even saw it in February too, but it's a pretty good range, I will say. Yeah, that put call ratio, man, I'm telling you, I honestly never really looked at too much until the past year, but it's been a good, it's had its uses for sure, I will say. It's gotten its fair share of use. Okay, what else is there to do here? I added some of that. Mesa, we're just sitting on contracts that are just not filling. We'll see if we get filled before the close. The SPYs are up here. Oh, wow, these are going for 188 by 190 now. It says 178 up here, but the bid's at 188, asks at 190. So what does that mean? I'm up on these things right now. Roughly 30% on the day on those. Nice. But I'm looking for 100 plus, ideally, on that type of play. We shall see. I'll potentially add that back if it does come down. This is some June 460 calls on SPY. More careful working on blocking out the FOMO. Yeah, no, I mean, that's the thing. It's very, and everyone sees it. You see how easy it is to get caught up in that. Like, we have one little reversal. Yeah, does this reversal look promising? Yeah, it does. To me, it looks very promising and inverse head and shoulders. We didn't go down to these lows. We pretty much bounced the same spot we bounced in January. Very similar candle, obviously not as large of a candle, but a very similar candle to the literal bottom that was put in here in January. And then if we do the same thing after that, we kind of have some chop, which I would actually think makes sense, because think about it. With earnings coming up, I wouldn't be surprised if we chop around the rest of this week. Don't test these lows, but chop around this 430 to 420 range, something like that. And then eventually we'll see a bigger move either down or up after that. And we'll get more continuation depending upon a bunch of other factors, right? But that's the idea. So that's it looks like we could be repeating this this move back here in Jan. Now the key will then be if we break above this 460 on SPY, if we break above 460 this time, then yeah, I mean, and then it's all-time high. Then I think we're legitimately going to have a shot for all-time highs in the coming weeks after that. We'll probably get some resistance up here towards 468 and then 475, and then after that we'll see what happens. But that's the spots to watch. It's still a long way out, but after this earnings cycle, we'll see how this plays out. We'll get a lot more clarity on the realities of that and what potentially could be going down. So we will see. We got 5 minutes to go. I'm going to wait a few minutes after to see if we get the earnings from CVRX. I want to get those earnings. And if we get those let's see when these last ones were reported. They report these at 4:05. Yeah, so they should drop these at 4:05. So yeah, wait a few minutes after the close. So yeah, and we'll see. We'll see what the current cash position on this is looking like, because they have, as of last report, they got a lot more cash than the market cap, and they got some promising stuff coming up, and they got some good sales growth. We'll see if they can live up to some of their numbers though, because they gave us the numbers. They said, hey, here's what we expect. Where is it? Somewhere in here. Here's what we expect. Okay, let's see if you came in line, if you beat those expectations of yourself, and the company is the one that you expect them to say, hey, we think we're going to do this and this, and it's really when it comes to analysts that you come and say, okay, what's the truth here? Like, what do we actually think? Companies that the CEO, the company, they're the biggest cheerleaders. Makes sense, and they should be. But it really comes down to like, okay, can they live up to this? And it gives you a good feel for their track record. Could you trust them if they come in and they do $1.2 million in rev? Can we trust them? Is this a high conviction trade? Probably. I don't know. There's maybe a reason why, and we can probably figure it out. But that would give me a little bit of a turnoff to this play. They come and do $5 million in revenue this first quarter. Now I'm like, wait a second. You guys did more than you thought. Something's up, and it's a good thing. So that's what you want to. That's what we'll watch into the after hours, or at least the first few minutes of the after hours. We'll see how it shapes up and how it all handles itself out here. Let's take a look at, where's FinViz? I was looking for FinViz. I have it somewhere. Here it is. FinViz. What do we got today? Let's just see how everything is shaping up. Good amount of green, energy red, but a good amount of green across the board. I didn't realize that ExxonMobil, I think, is a pretty good weight. There are some energy plays that have some decent weights in the S&P. So, interesting. CVRX. No, I mean, hey, CVRX had some good insider buys way higher. So it's not even, they can't even get out. Like, they can't even dump it out for a profit right now. We'll take a peek at this thing. Here's the chart. I mean, I like it versus that 460 a lot. And the volume's been high. The volume has generally been high. So, from March 15th, as the thing has gone from 650 to 460, pretty big decline. The volume's been high. It has not broken the 50 SMA in a while. Got to go back to last year. But, I mean, these are the charts, man. These are the charts. 10 million float. These are the charts I love to see because, this has range. This could have a massive, massive move. The problem becomes timing it. So now we time up a potential bottom being put. We got some bidders right now on level 2 right now. A little bit of a bidder, 2,000 share order coming in. Now you could be wrong. So I'm fine taking some paper cuts. If you take this trade, we'll see how the earnings goes. Maybe tomorrow it's a better idea. You take the trade and it falls below let's say 450. Give it a more psychological. You get a drop below 450. Okay, I'm out. So what? You lose whatever the percentage is. You lose 20 cents, 30 cents from where you are. It's a good, you lose 6%. Okay, 10% worst case scenario, if you didn't average in. It's not a bad idea, in my opinion. So we'll see. We'll see what happens on that. SPY sitting here at 428. Looks like it's going to close right around that 428 area. We'll see if it closes above or below. Let's see. What else? I wouldn't like a play like that is not something that I would be like, oh, jump in the after hours, because there could be a pretty good chance of like the spreads are huge. So, I don't know. I'm not playing a big spread. You'll probably get a better chance to buy a dip tomorrow, Another thing to watch here as the market's about to close is the current situation in China. Okay. So we're talking about like all this stuff, but China is you're really seeing things coming in terms of their usage for energy and stuff because they're getting lockdowns again. So their oil usage and all that stuff is that's where you're kind of seeing things kind of pull back on that front. So I'm interested to see how all that plays out going forward. Let's see what's going on. I see someone saying Dogecoin's popping off. Let's take a look at what Dogecoin's doing. Dogecoin up wow, it's a pretty good day for Dogecoin. Believe it or not, a nice little spike off the bottom. What's BTC looking like? Bitcoin? Yeah, Bitcoin. Hey, look at that. It's like at that trend line, but it may just try to dip below and then rip back up and end up holding that. It's interesting, but it's the same thing. Bitcoin and the stock market are very, very highly correlated right now, and I don't like that. So big picture, don't like that. But if we think the market's going to go higher, well, then guess what? Bitcoin will probably go higher too. All right, so we'll jump in and take a peek at, I want to have the after hours scanner pulled up. CVRX, I'll have pulled up here. They got some little buys into the close, so we'll see what happens. And this thing, by the way, whatever happened on the 19th, something happened. But this went from 460, it spiked to 570. Like, it's just a very low float. You can kind of see on very low volume, the thing has made some wild moves. So do the math on an FDA approval news. Do the math on, any positive news. If this is a good earnings, like do the math on that as to like where this could go. And this could really fly. And really if it gets some volume, it's got to get some volume. So we'll see. My AESC closed at 161. So it didn't close below 160. We're staying in. That's it. We're staying in. So no need to get out of that stuff. Let me jump over to the CVRX. Let's refresh this page and hope that they reported at 405 last time. So it should come out in the next few minutes. We shall see. Let's just jump over to FinViz and just see what the overall update for the day was. So Dow finishes up 0.71, NASDAQ 1.29%, and the S&P 0.58. So a pretty good spread across the board as to what's, up. It's not like they're all correlated super, super close. NASDAQ the most because I believe it's a 10-year coming down. The more the 10-year starts to kind of come down, the better the NASDAQ should do, and the more relief you're going to get on the NASDAQ. Let's see if I can get some more information from this. Nope, they still haven't released the updated put-call ratio. So we'll see if we can get that soon and then have a better feel for that. Ethereum is pumping up. Doge at 29%. Oh, it's Elon's. Yeah, makes sense. Now I get it. Why Doge is up because of Elon. Yeah, that's cool. That's cool. EBON is a Dogecoin miner. Let's see what EBON is doing. This is not something that I would be worried trying to get too caught up in. However, EBON is bottomed out. It is bottomed out. Yes, it is. So this could be an interesting idea. It looks like a 46,000 share order. So someone just slapped 46K. Someone before that slapped 26,000 on this thing. Interesting. Decent size coming through. It's got some range. If Bitcoin pops up and Doge pops up, if Doge goes, then you got in more of a sustained run. Yeah. And it's funny too. I've found, to be honest, that I've really liked the 3X ETFs. So in general, until the market really chops around or really just doesn't move for a while and has a lot less volatility, like look at this, like TQQQ, the range you could have had today on this thing from the lows, to the highs. Obviously, it's a big range. 7%, obviously options, yep, I understand, but you could play shares on something like this. Heavy size, obviously, heavy size, but play shares, don't worry about time decay and all this and that, and play just the direction of the market. TQQQ, when QQQ is going up, and then SQQQ, when QQQ is going down. So play the two of those, and you have a lot of fun with that. All right, let's see. What's going on? We got any CVRX data yet? No, it's still 3. I guess we have one more minute to go until they potentially could release it. So we'll see. We'll give it a few minutes, and then if they don't release it, they don't release it. But I'll be watching this and just it's not like, oh my gosh, get in. But it's okay if they drop some numbers and they're better than what their expectations were, and they have a decent amount of cash and they're burning X number of dollars, then yeah, this could be an interesting idea. And it might come out on BAM. Actually, BAM SEC is a better place to go to get the information first. So yeah, you want to watch BAM SEC, watch the financial reports, and that will be the spot to go as well on this guy. Market cap, man, of under 100 mil. So, geez, you're getting down to a pretty cheap spot. And we'll see how this plays out. Grill reported a while ago, so Grill is okay for now. But the PR, we're looking on that thing. Bought some new shares of Fidelity's ETF FDIG, crypto related. Okay. Let's take a look at it. FDIG. Fidelity, crypto industry, digital payments ETF. So that's brand new. Today it started trading. Interesting. Dumped a lot today, but, you know. Well, who knows? We'll see how the range develops over the next coming sessions. But, yeah, I mean, if you're bullish on crypto and stuff, I don't think it's... Also, not a bad... I'm not a bad... long-term play in my view too. Mega caps reporting. Yeah, there are, but nothing crazy today. We have, let's see. I want to pull up earnings calendar. Earnings. Where's the earnings? I should probably, honestly, have to just save this. Earnings calendar, and there should be one of these guys who dropped it. Yeah, recently. Here it is. So you got today... Nothing crazy. You had some Coke reported and Activision reported earlier. Nothing crazy really today. It's UPS tomorrow, pre-market, Pepsi, GE, 3M, JetBlue. Oh, it's actually a pretty big one for JetBlue. I got to make sure I follow that one tomorrow morning. You have that tomorrow. And then you have the big ones tomorrow. Tomorrow afternoon's going to be big. You have Microsoft, Alphabet, Google, Visa, GM, Enphase, Chipotle. Man, Chipotle. I haven't had a bowl in a while. I'm just feeling a Chipotle bowl today, but we'll see. Got a lot of food at home I got to eat. But yeah, so no, that's what we have. So it's really Tuesday, Wednesday, Thursday are the big days. Tuesday, Microsoft is like a 6% weight in the S&P. Google's a couple percent as well. You got some big players there. Then Wednesday, I don't think Wednesday's a huge day. Not really, but it will be big because you got Boeing, you got Spotify, some big names that have made some moves in the past. You have Pinterest, Teladoc, Qualcomm. Those are some big names that have been volatile as of late. Definitely some big time downside. Ford, a little bit of action with the EVs coming in. We'll see how their numbers look. PayPal has been a crazy one to watch the past couple months. And then Meta. You got some big names that have had some big reactions. Everyone will be looking I'm going to buy some Facebook puts, or I'm going to buy some, PayPal puts because I'm going to make, you're going to have people playing those sides. We'll see. And Pinterest too, they've had some big moves. And then you got, Thursday. It's really Apple, Amazon after the close. Apple, Amazon, huge. That's it. After that, you got some oil plays reporting. They could have some decent numbers. We'll see how that plays out. But yeah. Yep. So those are the times. I feel like, to be honest, it might make sense to just do a live stream tomorrow afternoon for this. I feel like it just makes sense just to go live last half hour of the open tomorrow, and then into the next hour or two or next hour of the close to see how this stuff reacts. Because these are going to come out and they're going to hit all at once, and it's going to be oh my gosh. So we'll see. We will see. People are talking about EBON though right now because it's the Dogecoin miner, but it's not gotten much volume yet. But it could be one to watch if Dogecoin keeps up. Just watch EBON as an idea. As a sympathy play off of Doge. Doge is up 25%, so we'll see. Dogecoin, it's coming up into the last spike we got back in April popped to 18 cents. Okay, got rejected. Next spike, 21.5. It's got a lot to grind through, but it would be nice to see a nice little run on Doge. It'd be kind of cool. Wouldn't be opposed. I wouldn't be opposed. All right, it looks like, I'm guessing that this, here it is, CVRX. Let's dive into this and then we'll wrap things up because why not? All right. So, really quick, CVRX came. This is their last report. Talking about the next. Oh, here we go. They expected for the first quarter of 2022 total revenue between 3.6 and 4 mil. What do we get? 4.1. They beat expectations. A 43% increase prior year, or I guess a year from a year ago, the same quarter. Heart failure revenue was 2.9 mil, an increase of 133%. And they received an FDA approval for a new programmer in April. Okay, so they already got that. I just didn't see that news. That's already priced in. This is interesting. I think this is interesting here. So rev was that. We had, 43%, great. Okay, let's see what else we can find. Your profit was 3.1 million. Okay, gross profit was 3.1 million for the 3 months. Let's go back to this report and find profit. What was the gross profit? 2.7 mil, so the gross profit's up quarter over quarter. Okay, great. That's good to see. R&D expenses increased 0.5 mil. Let's see what we can find for. They were 1.3 mil last quarter. And they came in at 0.5, so they came into 2.3 total, and they were at 1.8 total. So they came up a bit there. So their profit, so the revenue was up, but they came up in expenses. It makes sense. These companies, they need to increase whatever, hire on people, or they have other stuff they got to do in terms of, media and all that kind of stuff. Mainly as a result of increased headcount. Yes, there's more people working there, so that's why. Increased clinical study expenses and an increase in non-cash stock-based compensation expenses. Okay. Expenses increased to 10.8 mil versus SG&A to 9. Okay, so it's still in line. Nothing too crazy on that front. All right, so scrolling on down, what do we got in cash? Guess what? We have 131 million in cash. They only dropped their cash position by 10 million in a quarter, which is good to see. So they're holding cash strong, and their market cap is less than that in cash. So I like this. I like this look right here. And now they're expecting for the second quarter, they're expecting total revenue between 4.5 and 5 mil. So it looks like a nice, slow and steady increase. I mean, I like it. To be honest, I like it. Now, it's not moving in the after hours because no one's paying attention to this thing. No one's here. So tomorrow, we'll see what happens. But I think under 5 versus 450, I really 460, would be the spot to kind of want to see it hold. But I think this could be a good swing. Under $5, you want to buy under 5 and then risk it to 450. So have yourself in that little range, and you're looking for a move 6 plus, ideally. Risk, make sure that rewards at least 2x. So 6 plus would be a good spot to take something off the table. And then 450 is a good spot for a stop, in my opinion. Around there, mental stop. So that's that. Watching Whirlpool. What is Whirlpool up to right now? Let's take a peek at their, they're in the after. They were reporting today. I remember, Whirlpool. What's up? What is their ticker symbol? WHR. It dumped and then it came back off that earnings. Let's see what their earnings came in at. What was the ticker again? Ticker was WHR. Jump back to that. WHR is, they come in with, what do we got? Misses EPS, and they cut their 2022 EPS. Housing slowdown confirmed. Yeah, interesting. So they came in. They adjust their EPS down for the full year 2022. Quarter one rev came in a little bit under expectations. So yeah, you'll probably see this thing. I mean, it's trading down, but I don't know how much of that was priced in. I don't know. The thing was down a good chunk already, so it's not like it was down that much. It actually had a decent update today overall, and then it came down the after hours. Whatever. So that is that. CVRX, I think, is a good idea to have on the list. It's a good, and then that's just it. Look at the earnings; it looked good. I mean, so just playing that, looks good. It's low float. I like it. It's good stuff. Company received FDA approval for the new programmer, which provides simple programming. So they're still waiting on one more FDA approval, I believe. We go back to this prior report back here. Here it is. So they got the approvals for the IPG and the programmer. Now they're looking for the MRI conditioning labeling. My guess is that I don't know how hard that would be to approve. It's just labeling. It seems like. I don't know the full details, but it doesn't seem like that's that far off. So that could be a PR coming up in the next couple of weeks on CVRX. So we'll see. thanks so much for watching, guys. I appreciate it like always. I think the plan will be probably do a live for the earnings because we might as well. We may as well. For the earnings tomorrow, Wednesday, and Thursday. Honestly, we'll probably just do one every day for this week because it's just a lot of stuff going on. So it's cool. It's better to talk through it, live instead of just like, what happened yesterday? Like, oh yeah, like it's too late. Yesterday already happened. You know what I mean? So that said, thanks so much.